one. Third quarter performance from the company came in line with industry growth expectations. It registered a sharp expansion in gross margins, and they registered double-digit volume growth as well. We have Anuj Jain, Managing Director and CEO at Kansai Nerolac, joining in to take some questions. Anuj, great to have you with us here. Good morning. Appreciate your time on CNBC-TV18. Could you first start by telling us what was the volume growth in both the decorative and the automotive business? It's early for the fourth quarter, but we're 1 month done. Has the momentum sustained in Q4 so far?
Good morning. Thanks for having me here. So for decorative, generally we track volume value both. So volume growth has been double digit in Q3. And generally in the industrial segment or auto segment, we don't track volume. It is based on the value. So the value has been double digit. For the coming quarter, as you're saying, I think the industrial momentum, specifically the auto momentum, if you see the passenger vehicles, the four-wheelers, the production growth of the industry has been in the line of 5 to 6% at the YTD level. And what we have seen in the last 3 months is the green shoot in the two-wheeler business, where the production growth of the industry was going negative if we see the first quarter or second quarter. But in the third quarter, it bounced back. And we feel that this momentum will continue. So we feel that the industrial momentum will continue, and in decorative, the growth will be led by volume.
Okay, the growth will be led by volume. Okay, I didn't understand the split between decorative and the automotive business. What has the volume growth been so far? And if you're saying growth will be led by volume going ahead, do you expect to see double-digit growth in both these segments, auto and decorative? What's the outlook?
It is what it looks like. As I said that, in the rural segment, which was not doing so well in Q1 and Q2, we have seen Q3, there's a better recovery in the rural. And if that continues, I think in the decorative, maybe 8 to 10% of volume growth is possible to continue. And industrial, the momentum, the automotive, the momentum is good. So the value growth should be closer to the double digit.
All right. Hi, sir. Morning. In the decorative business, but there's going to be a couple of large players that are going to come in there. So what's your strategy? I think your current market share is around 9 to 10%. You can update us in your decorative business. What is the market share? And also, would you focus more on industrial because of the competition coming in?
Yeah, so, the advantage with us is that since we are one of the most diversified portfolio, and we are present in automotive, the non-auto industrial segment, and we are focused on all, these segments. So that's the industrial segment definitely comes handy for us. Within the decorative, you rightly said, our market share is in single digit. And we have been working in terms of our paint plus our differentiated products, the influencer strategy, the service what we introduce. And we are quite focused on the steps what we have taken, because last 1 year, 1.5 year, quarter-on-quarter basis, we have seen the improvement as the inputs, what we are putting in decorative, and we are seeing the results. So we'll remain focused on that. Competition has always been there in this industry, and healthy competition is always good for the consumer, for the industry, as it keeps you always on the toes. So I think the healthy competition is always welcome in the industry.
No, got that. Now, just to go on to some other matters, you sold 2 land parcels worth about 1,400 crores. Could you tell us what is the plan with the cash? And are you going to dispose of any other sort of non-core assets that you may have?
No, these were like 2 non-core assets, and the one we sold earlier, and the second one is now subject to the condition precedents. So we have signed the AFS, and we are definitely looking ahead in terms of using this for the business opportunities.
In what way, sir?
It's too early to comment upon it, but ultimately we are going to be focused on the business growth.
Would it come back? Would a part of it come back as a special dividend or something, or this will all be used in the operations?
I cannot comment at this moment of time. As I said, the first priority would be the business opportunity, but if it does not work out, then there may be a possibility of, as you are saying.
Okay. All right. What are we looking at? If you can just come back to the overall picture, right? You said 8 to 10% volume growth in FY25 is possible. Got that. That is across the board. But can you just help us in terms of what are you looking at as a sustainable revenue growth, say over the next couple of years? What could be the range? And also on the margin front, what are you targeting? Because in Q3, your revenue growth was barely 5%.
See, if you see the past last 5 years, 10 years, I think the paint industry, especially in the decorative, has been growing in the double digit. Maybe last 1.5 years, it is slightly lower. And I don't see any reason that why this kind of growth should not continue, because the penetration of paint is still in the range of 50 to 55%. And as the urbanization is happening, more marketing efforts, I think this will continue to grow. Also, still the 25-30% of the industry is informal. So the formalization also is happening. So I think next couple of years, the double-digit volume growth is definitely achievable for the decorative segment. Industrial generally is cyclical, but there are two parts of industrial. One is the auto, the other is the non-auto industrial, which we call high-performance coating. And looking at the way the government is spending, they're increasing their budget on capex, the capex cycle. I think we feel that the capital good industry, and we are one of the major suppliers to the capital good industry. So even the non-auto industrial segment, the outlook looks very positive.
All right, Mr. Jain, to get to the point that Sonia asked you on margins as well, your gross margins are expanding, but your EBITDA margins for the last 3 quarters have come down, in fact. Could you tell us what is the sustainable EBITDA margin from here on? And also, tying in with that itself, how much are you spending on advertising costs as a percentage of sales? Are you looking at upping that?
So in our case, since that our business mix is quite different, it's industrial and decorative. So if you look at the category level, the gross margins, remain intact. But every quarter, there is a change in the business mix, and that's why you see the difference. In gross margin and EBITDA level, the difference, one, as you said, that in the advertising, where we have already upped our expenditure by more than 1%, and that's why you see a difference in gross margin and EBITDA level. So overall, what we are spending in advertising is about 4.5% to 5%.
And sustainable margins, sir? I didn't get that. As the graph is showing us on the screen, it's come down in Q1 from 15.5% to around 12.7%. Outlook from here on?
That's what I'm saying, that we don't look at the quarter level. You can look at the YTD annual level. And gross margins are the clear picture that depending on the business mix, the EBITDA level, it's changed. But if you look at the YTD level, which is around 14%, that's like a sustainable margins.
All right, we'll let you go on that note. Thank you so much for joining us and giving us, an update on the business. That's Kansai Nerolac. Let's do one.